So now you only need 125,000 where you needed 200,000 before. This is massive. I think it's great for anybody who is looking to do that move up.
Are you thinking about upgrading your home in the Greater Toronto Area? This September market update is opening up some opportunities for buyers out there and for sellers looking to move from their first property to their next property. With new mortgage rules, increased rate cuts, and increased inventory, these are three factors that could benefit you when it comes to the real estate market in September. With these three factors in play, this could be the time for you to make that next move. My name is Mike Carpino. I cover real estate from the GTA all the way out to Waterloo. So if you are looking for any assistance in that real estate market, feel free to reach out. I've got my number here on screen, or you can book a call with me in the description box down below. Today's video, we are going to dive into the September 2024 market stats that had just come out here, and we are going to break down some key points as well as what the prices have done over the last 30 days. If you watch my previous market update videos from August, they are up here in the top corner, but August was a historically low transactional month, and September was better than August. So here's the great news right off the bat. So let's dive in. So home sales are up in the GTA. They're up about 8.5% year over year, with about 4,996 units that actually transacted through the Toronto Real Estate Board in the month of September. The average selling price is still around $1.1 million. So we've seen over the last 6 months or so the stagnant real estate market that we're dealing with, and the prices have actually stabilized over the course of these 6 months. If you're a seller, you have definitely done a great job in terms of holding your ground when it comes to your listing price and not giving your home away. We had earlier on seen some sellers kind of give up more than they maybe should have on their listings, but we have seen some sellers recently just putting their foot down and saying, if you want my home, this is what it's going to cost you in today's market. Buyers, you might be frustrated. If that's the case, you've been trying to find a good deal out there. Maybe you find that home that you really like, but the seller is not willing to negotiate. You have to make that decision ultimately as a buyer. How much do you like that home? Are you buying this with an emotion attached to it? Or are you buying it because it's a great value? I always encourage my first-time home buyers to buy with the intent that you're always going to move this product in the future. You're going to sell this home. Your first home is rarely ever your forever home. So keep that in mind. Don't get too emotionally invested. Maybe find something that is a good deal that you're going to be happy living in for the next 3 to 5 years, but understanding that you're going to have to sell this home, so you want to get it for a great price, if at all possible. The second point I want to cover is the interest rates. We've now seen rate cut after rate cut after rate cut, and it does sound like at the end of October here, we are going to get another rate cut. It might be even 50 basis points. It's definitely going to be at least 25 basis points. And the more rate cuts that happen, what this is doing is it's opening the window for more buyers. So September, we saw that 8.5% uptick in activity. We saw the sale prices stay fairly flat. If we see more of the rate cuts happening, what's going to happen is eventually that door is going to open for buyers. That floodgate will let people trickle into the market. They might feel more comfortable getting in to a home instead of holding out longer for the prices to drop. You've got two choices as a buyer. You wait for the rates to continue to go down to whatever that point you are going to feel comfortable at, but once you do that, you know the prices are going to skyrocket up. So you've got to find that happy medium between the two. And when I say skyrocket, maybe they're not going to go up hundreds of thousands, but they're going to go up. That's just a simple lower rates equal higher prices, higher rates equal lower prices, or stable prices. So you're going to have to choose. Do you want to pay a little bit less for the house today with a little bit of a higher rate, or do you want to pay lower rate, a little bit of a higher price potentially, or just have more competition when it comes to buying a home? If you're looking to buy your first home, the last thing me representing you is interested in is a bidding war where you have multiple people who are interested in the same property, and then we have to figure out what you want to sacrifice as that first-time home buyer. Do you want to sacrifice a financing condition, a home inspection, sacrifice looking at the condo documentation and making sure that they're financially stable? I don't want to sacrifice any of these three things if I can at all control it, and you shouldn't either if you're a first-time home buyer. So choose which avenue you want to go here. It's possible everything still stays flat with another rate decrease. We do not know how many rate decreases it's going to take to get the market to spike up just a little bit more and get some more activity. The next thing I want to cover is the flexibility with mortgage rules. Mortgage rules have changed in the last 30 days. We have seen some very interesting changes. So there was an announcement in the summer that if you're buying a new development home, you can have a 30-year mortgage amortization as a first-time home buyer. This has now been extended. If you are looking to buy your first home, whether it's a resale or a new build, you're now eligible to get a 30-year amortization. What this means for you is lower payments monthly, but higher interest over time. Now there's a nice little, we'll say, loophole or strategy that you can take here if you are in this position. Take the 30-year amortization, but make sure you're doing accelerated bi-weekly payments, pay off more of that interest quicker. Immediately, you're gonna have a couple years shaved off of your 30-year amortization by doing accelerated bi-weekly. Not only that, you can also do lump sum payments, or you can expedite your mortgage in several different ways. So this is great. This opens the door for people to have lower payments and get into the housing market. The second change to mortgage rules is the stress test on your mortgage renewal. So in the past, let's say your mortgage was with TD Bank and your 5-year term was up, you were up for renewal, and TD Bank only offered you 5.5% on the renewal side of things. That potentially would have been about $5,400 in mortgage payments a month. Now, what you're able to do is choose which lender you want to work with based on the rate without having to requalify yourself under all the stress tests that you previously had to, by providing all your documentation for your employment, pay stubs. Every single bit of information that you had to submit when it came to getting your first mortgage no longer needs to be submitted, which is a blessing, because if TD offers you a 5.5 and RBC offers you a 4.9, you're going to be able to save yourself potentially $200+ here instead of just renewing with TD or whatever that original mortgage company was, because you had to requalify under the stress test. So this is massive for anybody who is in their current mortgage term, coming up on renewal, and they were not too excited about the rates. This is going to get you a little bit more excited. Now, the next thing I want to discuss is with 10.5% more listings on the market this month than we'd seen the same time last year. If you're a home buyer, this is fantastic for you. You have more inventory to choose from. You are going to have the flexibility to, see what's out there, decide what makes sense for you. If there's a house you're looking for in a specific area, you're more likely to find it now with the amount of inventory that we have compared to what we've seen in the past, where you've had a little bit of inventory and you've had to maybe flex on a home that you weren't so excited for right out the gate. Not only is this increased amount of inventory great for you as a home buyer, it's also fantastic if you're looking to make that transition in that move up situation from your home currently to a bigger property. This means that you're going to have more choice. You're also going to have to deal with selling your home. In today's market, things are not selling as quickly, but you're going to have a lot more inventory to deal with. You're going to have more choice. You're more likely to find something that you're excited about that really will work for your family long term, and it might end up being that forever home that you're hoping and looking for in the current market. Now, opportunities for first-time buyers. Is the window closing as rates get lower? Potentially that door shuts. We don't know for sure. We've already talked about that a little bit earlier on in the video, but this is just to reiterate. If you're looking to buy your first home, think about what the market looks like long term. Do we think that the market is going to crash, quote unquote, from where we are today, or have we already hit that bottom and we've kind of plateaued? Me personally, I think we've kind of hit that bottom. I don't know if there's more decreases coming in the actual market. Obviously, we don't know. This is just my specific opinion. You could ask 100 agents and get a different opinion from several of them, but I think we've actually hit the bottom of the market. I think once the rates start to come down more, we might see the prices start to go up, and that could potentially be the closing of your window if you are on the fringe of your mortgage affordability. If the bank has told you you can only afford $500,000 in the mortgage side of things and you have only maybe a $50,000 down payment, you are going to eventually be priced out of the market, because for 550 grand, let's say you want something in Toronto, it's getting more and more difficult. So there's been one more big development when it comes to the mortgage rules. Previously, if you spent $1 million or more, there was no way around it, a minimum of 20% for your down payment. Now they've actually stretched that out to 1.5 million. So previously at $1 million, you needed $200,000 as your down payment. Now that only triggers at 1.5 million, which obviously you'll need $300,000. But up until that 1.4999 price point, you do not. You only need 5% on the first 500,000, so 25,000, and then 10% on the remaining. So now you only need 125,000 where you needed 200,000 before. This is massive. I think it's great for anybody who is looking to do that move up. You have that equity in your home potentially. This is going to give you that opportunity to use that equity without having to put 20% down, or maybe you just were not able to put that 20% down. So if you are thinking of upgrading, if you're thinking of buying your first home, based on what's happening in the market with the increased amount of transactions that are happening, with the increased amount of inventory that's happening, and the stability in pricing, it might be the right time for you. And if it is, you can text me at the number here on screen. We can chat about it one-on-one and see what makes the most sense to get you into your next home, whether it's your first or a move-up property. I'm here to help you guys whenever you need. My name is Mike Carpino. Thanks so much for watching this video, and I'll see you in the next one. Bye for now.